Brian is a full-time trader in technical analysis of the Emini S&P futures. TraderShark has a unique style of simplifying the complicated futures market. With over 20 years of experience in the financial markets, Brian provides many opportunities to become successful at day trading as a business. Now, formerly a U.S. Army officer and a medvac pilot, Brian has learned the importance of discipline and dedication. As a professional in the mortgage banking industry, he learned how the world markets, bonds, and treasuries affected price action. And as a trained life coach, Brian is committed to helping both new and experienced traders in virtually any market or trading method. So without any other delay, let me go ahead and bring on Brian Rehler from TraderShark. Brian, go ahead, take it away.
Hi, William. How you doing?
Great. Thank you, Brian.
Excellent. Thank you, everybody, for joining us today after the market close. And I'm going to go ahead and just kick right into it. We're talking about day trading the S&P E-mini futures. We also trade crude, euro, and the NASDAQ, mostly crude and the S&P E-mini. So learn to day trade the E-mini S&P futures, and with commonly used indicators. This is what I wanted to capitalize on. Mostly when I was first trading myself, I spent in excess of $70,000, probably similar to a lot of other people out there, trying to find a method that was going to work. And I got tired of paying for these proprietary indicators. So let's go ahead and show you how common indicators we can use. First off, Investor Inspiration, I want to thank you all for inviting me for your live webinar series. And we're presenting 5 key elements that you can apply before you trade. 5 sounds like a lot. There's 3 primary, and you'll get an idea after we finish the presentation here. So disclaimer, I just want you to know, trading futures is like the cocaine of the industry. It's very fast. You can lose all or more of your money. So just be aware of that. And I'm going to go into more detail here in just a second. What we're going to learn today, 5 key elements used prior to entering a trade, how time plays a critical role in trading futures. I think it's very important. A lot of people don't even look at the clock anymore, right? Target key support and resistance levels, and also, you've heard this before, but trade what you see, not what you believe. We're trying to trade without our actual emotions. I mean, a lot of what the gentleman before me was talking about is they will get you trapped into a long position, and then you get all frightened out without actually knowing the direction or the trend direction. So trade what you see, what your indicators, regardless of whether you use the trading indicators I'm going to show you or your own, just you need to have confidence in your own trading system. I want you to take these key lessons home with you. In other words, I'm going to show you some specific indicators, and you can certainly use those in your own trading, whatever you trade. This will work on stocks, options, futures. Again, primarily the exact settings are geared towards the futures market. So who am I? That's me, my pretty mug out there at Lake Mead, Maryland. I'm a few years older than that, just turned 50. And I've traded over 20 years. I was also a mortgage broker for over 20 years, and I would always, you know, productivity breeds anonymity. I'd be behind closed doors, be trading, and then after that I'd become a mortgage broker. So I was also an Army officer. I was in Desert Storm and flew medevac helicopters. That doesn't mean you have to be a helicopter pilot to trade. It just means you have to have determination and dedication and focus. Professional life coach. I was trained by one of the world famous coaches. Actually worked with him out in San Diego. I can't mention his name for copyright violations. And I also have a degree in computer science, but the kids coming out of high school these days know a whole lot more than I do. What are my objectives? I want to create a core group of like-minded traders, which is awesome, where we're helping each other. We're not trading 5 different methods. We apply common, non-proprietary indicators to trading the futures market, and we do it inexpensively. I want to help reduce one of the biggest injuries to most traders. I know I'm talking a little bit fast, but I'm trying to put an hour presentation into about 45 minutes, so I can certainly slow down. I want to help reduce one of the biggest injuries that most traders use, and that's called overtrading, or want you to think before you click. And slowing down, I think, I also have a coaching program that's the biggest problem. Everybody wants to be in a trade, and we want to make you think, trade what you see, and then you click. So if you're looking to trade 50 times a day, my room's probably not for you. If you're looking to trade 1 time every 3 days, that's more of swing trading, that's not for you. I would say anywhere from 0 to maybe 6 or 7 or maybe 8 times a day, waiting. The money's made in the waiting. Provide a unique trading environment in a live trading room for new and experienced traders. We've been reviewed by Dr. Dean Hanley, and we were ranked in amongst the top 10 over 422 rooms, I believe, and maybe he's reviewed more than that. So why do we do it? Why do I do it? Well, first off, as a former mortgage broker, I'm an extrovert by nature, right? So you stick me behind 4 monitors talking, I really need to be talking to people, and so that's one clear reason. Also, success comes from a team approach. I mean, if you're trading by yourself out there, doesn't it help to really bounce some ideas off of somebody or to be able to talk back and forth, asking questions? And then finally, I believe success revolves around contribution of others. I really want other people to learn how to trade. I want them to learn how to be successful at trading the market. It's not a get-rich-quick method. I mean, you're not going to hit home runs. I'm not a breakout trader. I'm a pullback trader. So take that into consideration when you check out the website. Profit sharing. I certainly believe contribution back to society. We support the Russell Home for Atypical Children and Clean the World, both fantastic organizations. So let's take this step by step. After you place a trade, have you ever felt like this? I mean, we place trades and we get our emotions. It's when you buy a house, when you buy a car, you have buyer's remorse, you have seller's remorse. When you buy a stock or an option or a contract, you get this feeling, right? And you just can't take it into your own head as to calm down, focus, what do you see, place your trade. Why do we feel like that? We feel like that the market is geared towards getting you into bad trades and out of good trades. If you're in a good trade, it's going to try to shake you out. We're told that approximately 90% of the traders consistently lose money or more. So market timing and the 5 questions we ask. Why market timing? Another word for being patient. Prior to entering a trade. So a lot of people say, oh, the clock is hooey. It is not. Watch how this works. And I don't know if they're recording this. Hopefully they're recording it. If not, let me know. I'll try to get a copy of it to you. What time is it? That's the first question I ask myself. Floor traders are not rocket scientists. They don't want to be. They don't have a pocket full of indicators. They don't use multiple monitors because they're on the floor. They got, maybe their bosses may be telling them with signals what they should and should not do. But I want to help you simplify it. There's a lot of indicators, don't get me wrong. But time, price action, and volume is what the floor traders are watching. They know what time it is on the clock. They know when people are going to be stepping in. They watch the price action. They're looking for significant levels, highs, lows, watching the volume flow. They use algorithms. They use high-frequency trading, flash orders, dark pools. If you don't know what dark pools are, Google it. That's trading that goes on before you even open the computer monitor in the morning, right? And there's so when you get on a sentiment indicator or a tick chart, the $ tick, NYSE, when that thing loads up with just bright green and buy orders, do you think those are coming in from overnight? Absolutely. So how do we beat them at their own game? Time is the most important factor in determining market movement. And by studying past records of individual stocks or markets, you can be able to prove yourself that history does repeat itself. And that by knowing the past, you can, I don't want to say you can tell the future, but you can have a rough idea or a projection as to where price action should be going. There's a definite relation between time and price, William Gann. So the sessions, this is pretty cool. We have a pre-market session. I used to trade the euro, but it really has not been lucrative lately, so we're kind of shifting over towards crude. Pre-market's 8:30 to 9:30. I open the screens at 8:30. I come in, I do live broadcasting around 9:15. There is one trade that we do look for at that time frame. Other than that, SOH, right? Sit on your hands. First session's from 9:30 to 11:30. This is probably the most prime area to be trading, in addition to the last half hour to the close. 9:30 to 11:30, and the first 15 minutes, we don't trade. Let me take that back. We have 1 or 2 specific trades that we will take, but I want everybody to be calm. The market opens up. Everybody's in a frenzy. Be calm. Sit on your hands. Wait. That first half hour is called amateur hour. I know it's a half hour, but it's called amateur hour. And I've heard the floor traders refer to it as like taking candy from a baby. You don't want to get involved in that. You want to become one of them, and you can trade with them. When we talk about that, we have what's called a pro-range reversal, and we talk more about that in the Shark Den. The Shark Den is the live trading room. Midday zone. Well, what is that? I used to have it as a no-trade zone, but there are some actually pretty good trades that occur between the 11:30 and 1:15 time frame. Just keep this in mind. About 70% of the time, you're going to have a market movement higher. Why? Because the big dogs are out there having lunch. I know it sounds simplistic. I'm not going into the exact details. I just want to give you an overview. The bigger traders that are going to be able to move that market are going to assign a less experienced trader, or maybe somebody who's trying to make a name for themselves, to the floor. And I know that a lot of it's electronic trading and high frequency trading, but I want you to keep this in mind. This kind of helps simplify as to why I choose not to trade this time frame. if we've got a couple good trades, can you see my cursor? I don't know if you can see my cursor or not. From 9:30 to 11:30, a time frame that we're trading. If there's good trades that set up there, then I am not going to trade from 11:30 to 1 o'clock. If there are no trades and we have like just sideways movement, choppiness going on from 9:30 to 11:30 and no trades, then I'm going to be alert and I'm going to watch, because this time frame of the midday trading zone is going to be the time frame that they will tend to move the market. Session 2, 1:15 till 3:30. Again, another area that I've got one or two type of trade setups I look for. If they don't occur, I don't trade. Literally is that simple. And if you're a new trader and you're out there watching these screens for 6 hours a day, you're going to burn yourself out. So reward yourself by simply stepping away from the computer. The market close, 3:30 till 4 o'clock. Again, 3:50. This is Eastern Standard Time. Okay, from 3:50 until 4:15 generally is a no trade zone. So really, there's only 20 minutes into the market close. But you can set up for this afternoon. We were exactly waiting for what's called a shark attack trade. Never occurred, but we did have a little bit of a bounce off the low, and the volume kicks back in. So why is session 1 and the market close most important? A little bit higher volume. Reversal zones, are these important? They're good to know. Do I really use them as a reversal? They're just good to know where everybody else is placing their trades, right? So if the first reversal zone is 9:50 to 10:10, right? If we have a reversal, you have to determine when a reversal occurs. If you have a reversal, then you're not going to enter any positions long, or if you're in a long position, you're going to exit. However, if we do not pull back deep enough during these reversal zones, the likelihood is a continuation higher. We're going to talk about that. Again, this is a time frame you can take advantage of what are other traders doing. We want to do what the clock is telling us, the clock and price action. Okay, 10:25 to 10:30. Again, reversal zone at 10 o'clock, reversal zone at 10:30. 10:25 to 10:30. I know you've heard this, but it's very critical for us to watch. This second half hour from 10 o'clock till 10:30 is a time frame that they're adjusting and setting up to make a move. When? After 10:30. My favorite time frame to trade, 10:30 to 11:15. 1:15 to 1:30, again, not a big area that I focus on, but you want to know that this is a potential area that they reverse. 3 o'clock to 3:10, again, your 3 o'clock reversal, you've heard of it, and then there's one final one at 3:30. The markets tend to trend when? The markets tend to trend from 10:10 to 10:25. Do you think that's a good idea to be watching it at that point? Yes, because if we have a reversal or do not have a reversal, wouldn't it be an opportune time to be able to get into a trade and kind of watch it for about 15 minutes? If not, 10:30 to 11:15, mark this down. Whether you're new or experienced, this is the time frame to grab a trade, wait for a nice setup, and this is where you'll make the majority of your money, or you will tend to make the majority of your money, because this is where they'll stretch. And from 10:30, getting into a trade, maybe 10:35, maybe 10:40-ish, you'll start working your way up to 11 o'clock. What happens at 11 o'clock? The majority of people believe 11 o'clock is a reversal zone. It's not. And this is a time frame you can hold, weather that little bit of a pullback, and hold for this market to push a little bit higher. That's where you put the gravy on the top of your trades. Okay. So from 2:15 to 3 o'clock, another trending time frame I'm not real keen on. The trading afternoon, again, I reward myself. I walk out, take the dog for a walk, do the honey-do lists, ride a bike, whatever I want to do. Okay. Remember to reward yourself. From 3:10 to 3:25, another trending time frame, and this is really setting up for into the close from 3:30 until 4 o'clock. No trade zones. No trade zone from 9:30 to 9:45. Very important. Okay. If you're new to trading, do not trade during this time frame. Rest, relax, allow the market to set up. If you're an experienced trader, we do what's called a pro-range reversal. We also have, a potential Fibonacci trade, and we have special guidelines as to what we do before we enter a trade like that. Another no trade zone, 11:30 to 1:15. I should probably remove it from this slide. It's called a lunchtime trading zone, and the choice is going to be whether there's a trade set up from the 9:30 to 11:30 or not. Okay. Oh, lunchtime trading zone. There you go. From 3:50 till 4:15. Again, another time frame. The last 10 minutes going in, the professionals are stepping in. I don't want to get in their way unless you got a good trade and you're holding on with a trail stop. This is not a wise time frame to be trading. Okay. Special zones. This is important. From 1:30 to 2 o'clock. Generally, again, these are not 100% and they don't work 100% of the time, but if you got a setup and you know that from 1:30 to 2 o'clock the market tends to rise, then there's your opportunity. It gives you a little bit of confirmation. Again, it's not a whole lot of work, just watching the clock. I've got in the trade log and the trade plan, there's actually a time chart, and I have it in front of me all day long. It's in different color zones, and it kind of tells me whether I'm going to be holding on to a position or not. 2 o'clock till 2:15, this is awesome. Go back and look over the last week or so. If you take a trade and you're working your way up into the 2 o'clock time frame, I would highly recommend, I can't make recommendations, I'm not a licensed broker, but I would tell you that I generally do not take long positions after 2 o'clock if we're at the highs of the day. Just go back and look at that. So 2 o'clock to 2:15, the market tends to sell off. It does not sell off if we're towards the lows of the day, but if we're towards the highs of the day, this is just a critical time frame when the bond traders are getting ready to close. They're kind of working their way over towards into the equities market. 3:30 till 3:40, nice time frame to when the bigger money's coming in, higher volumes coming in. 3:45, this is also a time frame when the professionals are stepping in, a little bit more money's coming into the market, and you want to be aware of this. There's a little more detail, obviously, than what I'm going through in a webinar. What time is it? Jesse Livermore, one of the more famous traders I'm sure you've heard of. Throughout all my years of investing, I found the big money was never made in buying or selling. The big money was made in the sitting or the waiting. Is this important? It's absolutely critical, because your emotions will try to get you into a trade. You see a market taking off in one direction. We want to sit and wait for a proper setup. We're right back to the same very basic, trade what you see, not what you believe. What time is it? Summary, TraderShark's consider. Time a critical element in determining when to enter and exit a trade. What is the market condition? Well, we know this, but we seldom exercise it. So again, these are pretty basic things, but I want you to be able to be aware of it. Look, the retirees, if I could have told them many, many years ago when the market was collapsing that you could draw a support level by drawing it across the bottom of a trend line, they could have saved themselves a lot of money. I've got friends that rode Yahoo from $150 down to $36 a share. If you follow these simple steps, you can certainly help prevent that from happening in the future. There are three possible answers: trending up, trending down, not trending, consolidating, choppy, sideways, and other. We'll talk about that. What is the market condition? Trending up. I know this is a simplified view, but if you can recognize it, when in doubt, look left. I say, when in doubt, look to your higher time frame charts. If you're trading a tick chart, a minute chart, look left to a 30-minute chart. Look left to maybe a 10-minute chart, and you can determine a potential trend. So with this, higher highs, higher lows, you draw a line across the feet. I refer to it as an escalator, right? An escalator going up, you're drawing a line along the feet. If it breaks that trend line, then it's an opportune, and you're going to see this in one of the last slides, you're going to see how we've broken through daily and weekly support levels. This trend line, we break through it, and you have what's called potentially a kiss goodbye for continuation lower. The idea is this an uptrend or a downtrend? This is an uptrend. Trending down, same thing, only in an escalator, and some people get confused, you draw the line across the heads in a downtrend, right? Lower lows, lower highs, the trending down. Are you going to see it on a 512 tick chart? Are you going to see it on a 1024 tick chart? Are you going to see it on a 30-minute chart? Are you going to see it maybe a 15-minute chart? Maybe it's a daily chart? Just start being aware of the trend lines. This is what even the professionals are using trend lines, right? This is what algorithm. Consolidation and accumulation phase. This is called non-trending. Well, how do you determine this non? If it's going sideways, you don't know it's going sideways until it's too late. We have indicators that we use for that. I'll tell you what they are. I'll use an ADX, an average directional indicator, right? And that will, once it drops below the threshold, it's not trading it. That's telling me the market's sideways. This is a 4.5 point range. And these are called shark bands. You see the red lines and the blue lines, off lines. I calculate those. That's one of the few things that I have is actually proprietary, the numbers, the way I calculate them. Accurate. Watch how these things provide support and resistance. This would be a day I wouldn't take one trade at all. Not one. I want to see a break above these resistance levels, pull back and go. I want to pull back. Same thing to the downside. Or once you miss a trade long, then you know that these are going to be resistance levels for a selling short. Okay. What is the market condition? Other. It's this. Has anybody seen this? I can't see you raising your hands, but I'm sure everybody's seen this before. This is called a phone pattern. I hate this pattern. This pattern will eat your lunch. Take out higher highs and take out lower lows. We want to avoid this like the plague. We can see this on higher time frame charts. The market can stay irrational longer than you can solve it. One of the traders in my room told me this. I had to go research it. This is an awesome quote. Write this down. The market can stay irrational longer than you can stay solvent. What does that mean? That means they can chop up until you don't have any money in your account. Where's the momentum? Momentum is, I refer to trading with pretty cool. I use a steering wheel and an accelerator. Okay? Steering wheel, directional indicator, the ADX. The average directional, use that. And that kind of gives me an idea, do we have strength in an uptrend, strength in a downtrend? I keep it in the lower right-hand corner of my screens, and you can see it on the screens when you're in the Shark Den. And what do I use in addition? If you're sitting in a car and you turn the steering wheel left or turn it right, you're not going to go anywhere, right? But you turn left or turn right. So what do? We put an accelerator in there. Well, what's an accelerator? An accelerator is the gas pedal or momentum. So I don't care if you use a momentum indicator, stochastics, you can certainly use that. You can use CCI. We use CCI in the room. So you use CCI as the momentum. If that CCI is accelerating and our direction is turned up, then we're looking for a long position, right? We're looking for a pullback and a continuation higher. If we've got to turn to the right, right or left, I mean, I'm using that as a metaphor, but if it's down, the direction is down, and our accelerator is accelerating to the downside, then we're going to be looking for a short opportunity. I am simplifying it, but when you get into the room, you can get an approximate idea as to, hey, how is the direction? How is the momentum? We wait for a pullback on momentum, and we enter a trade. This is a great example. This is, regardless of the time frame, I use two charts. I use a higher time frame chart and a lower time frame chart. To the left-hand side, this is a higher time frame chart. Well, are these colored candles, they're Heikin-Ashi, right? Are they going to give me a direction to trade? They're going to help me, but they're not going to really give me a direction to trade. Can you see a cross of our momentum indicator to the downside? I'm not going to trade here. This is an anchor chart. This is a higher time frame chart. We call this a wave trade. Why a wave trade? Because if you've got a higher time frame chart that is giving you a wave short, then do you think that if you look on a lower time frame that your short is going to follow through in that direction? Do I want to try taking a long position when I've got a higher time frame chart short? Let me say that again. If the anchor chart or the higher time frame chart is pointing down right here, and hopefully you can see my cursor, the trigger chart has started a move and pulled back, and we've got almost an identical setup. There's your nice little red dots pop in. We've got red dots and green dots that pop up on the charts, and they give us a heads up of a wave trade. Pretty cool? Is it always this clean? Of course not. But for example purposes, we get used to drawing trend lines, anchor chart set, trigger chart fires off. What are the chart patterns? Well, we want to have chart patterns because they've been around for so many years, and everybody, the price action still respects them. Well, what is that? We've seen double tops. I'm not a big double top or double bottom trader, but I do like divergent tops or divergent bottoms, and that's simply saying that if you've got a high, the next high coming up is going to be a higher high. There's certainly an opportunity to short that if we're at a shark band. Okay? Again, this is not stuff that you have to think of real fast. It's happening slow. By the time it gets there, we're looking for a setup. Either we get the trade or we don't. If we don't get the trade, this is where you need to be confident, calm, relax, understand you missed the trade, do not chase a trade, and step back in at a later time frame on another trade. I promise you another trade is going to come up. We just don't know when. So we've got wedges, triangles, ascending wedges, descending wedges. Very important for us to recognize this. Why? Because that doggone megaphone is like a type of inverted wedge, and you're going to see it here in just a second. Head and shoulders and the inverted head and shoulders. Please feel free to visit the website. Check out the inverted head and shoulders patterns. Check out the head and shoulders patterns and how they operate and where they give you your profit targets. You can Google that information also. Megaphone pattern, also called a search and destroy algorithm. We're starting to see more and more of that with all this high-frequency trading. Inverted wedge and broadening top. There it is again. I hate it. This is what it looks like. Has anybody seen this? I don't care if you've seen it on a 1-minute chart, a 5-minute chart, a 30-minute chart. It's the same thing. They are searching for your stops, then they're coming up and taking out the stops of the prior swing high. They're searching for the stops, taking out the prior swing low. They're searching for the stops and taking out the prior swing high. Boy, I feel like an evangelist here. Anyway, what happens is after about 5 touches, 1, 2, 3, 4, 5, the tendency will be for the 5th break to work its way lower. Does it happen every time? Of course not. But it is something to recognize. This may be a time frame you do not want to trade, or if you're seeing an establishment of a megaphone, you want to be setting up or looking for the same indicators that we're using for a setup in that same direction. Oh yeah, that's not my son. That's just a picture I thought was really cool. All right, what are the chart patterns? Now, we do use unique terms, but for the most part, just to try to make it fun, because they talk about a boring trader as a good trader. Try not to keep it boring. The only time it's really boring is when you're kind of sitting on your hands. But we use wave trades. We use dive trades. Notice everything's kind of got an oceanic theme in sync with TraderShark.com. Hook patterns, right? This is just a modified flag pattern, but there are certain rules it's got to apply by before you can call it a hook pattern. Attack zone, again, go back to the videos and you'll see I call them hook patterns. I call them head and shoulders. A lot of that, all that stuff is free on the website. Check it out. Attack zone trades. You know, today we thought we had an attack zone. I'm sorry, a shark attack, and it did not materialize. You know, we did take a loss on this shark attack trade. It's not a high probability trade, but if the market sets up, it's very lucrative, and you can also get hurt very much. So I'd say the shark attack trade, don't pay too much attention to. Just sit back and watch it a few times, and then as we develop into more advanced traders, you can start to apply that. Where is your support and resistance? Again, a lot of this stuff sounds basic, but I want you to see where people have misinformation. Master the basics, you will master the art. What are support and resistance levels? Many traders believe that a previous high or top is a resistance level. They also believe that a previous low or bottom is a support level. Not necessarily. If we have a high, is this resistance? No. If we have a high here, is this resistance? No. This is what they believe. This is support. They believe this is a resistance and this is resistance. It's not true. Okay. The correct way to determine a support level or a significant level, this is why I use Sharkman's. The significant level, when a previous high is penetrated, that high becomes support for the move higher. I'll say that again. When a previous high is penetrated, that high becomes support for the move higher. This is the way you use trail stops. In other words, the old high becomes the new support level. Let's look at it. If this high establishes itself and there's a pullback, break above that, this now becomes support. Like it? This is where you bring your stop. You can bring your stop below the swing level also, but the idea is here's another swing high. Break above the swing high, this becomes support. Do you think that this would help you stay in a trade longer? Absolutely. Correct way to determine resistance at or a significant level is when a previous low is penetrated, that low becomes resistance for the move lower. Same thing. In other words, the other low becomes the new resistance level. Resistance levels. This low, and this is where we're looking to get in, right? The pullback, the sell-off, the pullback, looking to go short. This is a failed resistance level. This is a resistance level. Pose nice resistance for continuation lower. Resistance level, pose more. Does that make sense? And if you're unsure, it's much clearer when you look left. You look at your higher time frame charts. This is it all combined. Support levels, resistance levels. It looks a little different than having this as a resistance level and this as a support level. Repetition is the mother of skill. Tony Robbins, one of the world's greatest life coaches. Review, time. What time is it? What's the trend? Is it trending or consolidating? Momentum. People hear me say this over and over in the room. Time, trend, momentum. Time, trend, momentum. What time is it? Is it trending or consolidating? Where's the momentum? Is there a pattern? Now again, you're saying, well, there's 5 things, that's so much. Not really. The time, you glance at the clock. The trend, you can see by support resistance levels. The momentum, is it in your favor or not? This is really the most important one, I think. Number 3, patterns. Patterns gradually set up. They don't just appear. Support and resistance. Just got done showing you that. So how do we put it all together? Well, oh my gosh, there's more stuff on the screen. Yes, there is. These two yellow lines are our opening range. From range, these will give us an idea as to where a trend is. Do you think that if we break above this opening range, no questions, if we break this opening range and we get a pullback, isn't this an ideal time to get long? Nice hook pattern. If we break this low to the downside, do you think this is enough time for us to short? It is. Did it set up? No. Do you think if we have momentum of the range that this is a good idea to try to get long? Well, the anchor chart sets up, time frame chart, so the anchor chart sets up, and then we wait, as we bring my cursor to the right hand side, we wait for the shorter time frame chart to line up identically. Look at the time frame. On the clock, about 1:15, pullback right here at 1:15, 13:15 Eastern Standard Time. Still in a no trade zone. Does that mean you don't trade in a no trade zone? They're just simply guide, give us a break, give us an opportunity to give ourselves a break, or you can wait until you get outside your no trade zone. Look, is this an opportune time? If not, there may be an opportunity. Look, I can see up to the right hand side. There's our momentum crossing long and a pullback. Now, after you get a strong run like this, this is probably a lower. This is a lower probability stretch, right? You've got your 1, 2, 3. I don't know if I'd be taking that trade there. I'd be looking for a nice strong trade here. Okay. Can you trade below the moving averages? Sure, you can. You just got to make sure that it closes above them first. Let's see some screenshots. More screenshots. 10 a.m. continuation. Where are we? There's your 10 o'clock right here. Did this pullback break this significant level? This is the support level. Did it break it? No. If it hasn't broken it by 10:10, likelihood's continuation higher. What happens? Continuation higher. 10:30. Is 10:30, look at the clock down here at the bottom, 10:30, this is a reversal zone. Now, this looks like a pullback. Is this still a valid long? Yes, it is. Why? Because the pull really, I wouldn't call this the significant level because there's also, we want to see at least a pullback, okay, for continuation higher. But you can see if it does not officially pull back, likelihood's continuation higher. Do you think this is good to know? This is probably one of the most important rules to help save your lunch when you're trying to, I certainly would not be playing the reversals. I simply watch the reversals for a determination of continuation. What do we have here? We have once your momentum gets into extended areas, opportunities to get in, right? A little pullback, continuation. An opportunity, this is a pullback, another opportunity. Look, momentum set up, got stopped out, got my first target, got stopped out, continuation. We have another opportunity. Sure. Even above the moving averages? Yeah, because it closed below. So again, there's rules. You got to learn rules. You're not going to walk in and just learn how to trade in a day. You're not going to walk in and learn how to trade in 3. Look at it as if it's a language. You don't walk into a Spanish class and learn how to even know the numbers the first day. It takes a little bit of time. It takes a little bit of practice. It takes a lot of time. Screen time. What do we have here? This is a hook pattern, right? We break above our opening range, pull back, go. Look at the target level. The target level on a hook, very similar to a flag pattern. You take this swing low to this swing high, and you bring it to your entry point right there. Is that a long trade to hold on to? Sure it is. There's probabilities here. 4 ticks, 50%, 100%. What do you got? 70% chance of getting 4 ticks, 60% chance of getting your 50%, and a 50% chance of getting your T3. This is more of an aggressive trader's trade. This is more of a deeper pocket trader's trade. You want to get your T1 and T2, be safe, keeping your stop down here below the swing low. This could certainly be very expensive. So could you use this if you're a new trader? Well, if I'm setting up and you don't get into this trade, you can look at your conservative setup. These are all in the trading manual. The would be that an anchor chart sets up, a trigger chart sets up, your profit targets are tighter, and you can take advantage of the same type of move. Anchor chart, trigger chart. And chart sets a nice momentum continuation, nice setup above a shark band, continuation. If you got in on a trade, 1 ticks. If you got in on a conservative trader's trade, you pull back for 10 ticks. What's a 1 tick is $12.50. So if you got 12 ticks on this, I'm sorry, 10 ticks, you got $25. Okay? There is no guarantees. There's no promises it's going to work for you. The objective is when in the room, it's repetition after repetition after repetition. Ah, this is just the other day. We have been in such enough, everybody goes, is this the pullback? A weekly, is this the pullback? The whole last few months I said no, 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 until this first top line is a daily chart. Along the bottoms of a daily chart, the weekly support level and the monthly support level. Did this break monthly support level? Oh yeah. They thought all heck was going to break loose, going to the downside, and then you have what's called a goodbye. We're stuck up here. Where did that close today? Up around what, 1930? We're monthly support, I can tell you that. Okay, so what do I have? I'm not a big proponent of indicators. I do sell some trading manuals. I do sell subscription to do it. You can go to the Home tab, go to the Webinar Specials section. You can certainly check out, there's webinar sign up and also webinar specials, and this is what you'll see. So for investors, I'm inviting you. I've got a special going on. It's going to be good till midnight. You don't have to race to the back of the room and buy it by midnight tonight. How about that? I just got tired of hearing that from all the other seminars. You got till midnight of Friday. You got 3 days. I'm offering a free trial. Come on in and check us out on Friday. You got to register for it, so you got to go into this website. Home. I'll show you where that is. Right there. Go to TraderShark.com. Go to the Home tab and go to Webinar Specials, and you can add this. I got a $30 off the manuals. I'm selling them for $149. I mean, go read the comments about the manuals. Everybody says they're awesome. They're great. They start right from step by step. They're not overly technical. They get a little more technical as you get deeper into the manuals, but you can certainly read a few chapters and be comfortable with what you're reading. The Shark Den is generally $179 a month. The first month is $50 off. So $129 gives you, for $129, really you can't beat it. The second month it goes into $179. There's no obligation, no long-term contracts or anything like that. You can quit at any time. I think that's fair. Again, look right here. Take advantage now. Offer expires midnight. Midnight, August 15th. That's this coming Friday, and we trade the S&P and crude. I do watch the euro every once in a while, but I'm not trading it lately. Okay? I think that's about it. Any questions? Let me go over to the questions section. Pull it down. Anybody, I don't see anything. Anybody have any questions they would like? Or if you do, let me give you my email address. There's my email, brian@tradershark.com. If you have any questions, please feel free to email them to me. I will not give you the settings. The settings are in the trading manuals. We do have. You can use any type of, let me say, most type of trading software you want. NinjaTrader, TradeStation are the two primary. Thinkorswim, anything you want to use, you can certainly apply the same indicators to that. Do we sell indicators? We do. We sell them, but they're the same setups. They just got a few more bells and whistles, and they're not real expensive. If you want, we have them for NinjaTrader and TradeStation. Okay. So did I make my deadline?
Yeah, you actually have about 3 more minutes. 3 more minutes remaining. If there's anybody has any questions.
Okay, let me go ahead and go on to see if there's questions. Show. I can't see if that. Do I pull that down? Got quite a few people in here. No questions. Everybody's good. I'm pretty specific. Can I discuss more on the support and resistance? I can. I don't want to. I'm not going to go back and repeat that right now, but hopefully you can understand. Maybe you mean the shark fins, I think. Let's see if I can pull this thing down.
Yeah, looks like we have a couple coming in.
I may need some help with questions because I can't seem to pull it down.
Okay, I'll read off one for you here. It says, one of the questions by Terry says, this all works on individual stocks, with a question mark.
You can certainly use the directional indicator and the momentum indicator on individual stocks. I do not personally trade stocks on that, but let me give you a quick example. Facebook, where did Facebook open? $36 a share. How high did it go? $42 a share. What's 50% retracement? You can pull a 50% on a fib level. Was where? $18 and $21 a share. Where do you think Brian was buying? $18 a share and $21 a share. That's where I was buying. And I'm still holding. So do they work? Yes. Directional indicators and moment, they do. I don't have specific settings for stocks because obviously each individual stock based on its movement is going to be a little bit different. But those are, think of it, direction and acceleration on momentum. What else you got?
And Paul's asking about Fibonacci's. He's asking if you use Fibonacci's.
Absolutely, yeah. We use Fibonacci level. Sure, it's strong. And mostly they use. It is a natural number sequence, but it's a self-fulfilling prophecy. So we do use them. We use them off the lows and off the highs. I don't generally trade the fib levels in the middle or in the opening range, mostly because that's where your consolidation and chop occurs. I mean, how many times have you seen a fib level get stopped, get stopped, get stopped? You can get crushed pretty quickly. So we have a specific rule, playing off the bottom or playing off the top. We don't call tops or bottoms. We wait for it to establish itself or break a significant level. Then we know we've got a pullback. So you won't see me buying directly at the bottoms or directly at the tops. Long answer to a short question, I know.